We're delighted to be joined by Henry Lumby this morning of Allegra Care to chat through some of the challenges and opportunities in the social care sector. With over 20 years working in the property industry and formerly head of retirement living at Savills, Henry is now an executive director at Allegra Care and also chief development officer of Allegra's sister business, Amicala.
Thank you, Rob, and delighted to work with yourself and Christie's on the acquisition of Grove Care last year.
So we've tracked your growth with interest, Henry. We sold Allegra their first care home, St George's in Weston-super-Mare, I think in 2019, and it's been great to work with Allegra as you've grown the portfolio. 2022 was another interesting year for the social care sector. And how was it really for your team and yourself at Allegra?
2022 for us was a very interesting year. The macroeconomic situation was challenging, caused obviously by Putin and his war in Ukraine, and then the sort of impact that had around the government's inflation. And the sort of general instability that there was within the economy. For us, we saw that 2022 was a positive year overall. We acquired two portfolios of care homes, obviously one through yourselves, to take us to 12. But we saw the challenges around staffing, around inflation across multiple areas, and also increasing costs for finance. But overall, positive year for the business.
And the wider economic challenges, did that in any way shape your acquisition strategy at Allegra?
I think that for 2023, we're keen to acquire more, but we are being cautious around what we are acquiring. So we are looking for homes and portfolios that have a future-proof in their design, in their layouts, and in terms of their locations. So I think that we are proceeding with caution, but we are aware of the economic headwinds that have presented themselves and will continue to present themselves through the first half of this year.
So it feels like we're discussing the pandemic less in the sector now, and we're coming out of the other end. Reflecting on 2022, how do you feel that Allegra have fared coming out of the pandemic?
From Allegra's point of view, the occupancy across our homes has improved, and which has been obviously extremely positive. I think one of the most important thing and most positive side of things has been that we've been able to welcome families back into the homes, and so our homes have returned far more to normal in terms of events that we've held, in terms of working with the local community. And so whilst during the pandemic, we saw some absolutely incredible ways of the way that communities within care homes and local communities supported care homes, and particularly the team members within the homes who went above and beyond to look after residents in very difficult circumstances. We have now seen that we're returning to more of a normalized visiting patterns, people coming in and out of the homes. And that, I think, leads to more confidence. And we're seeing as a result of that more inquiries from the private pay market, which is very positive. But the long-term occupancy across 2022 was below where it was pre-pandemic, but definitely is improving, which is very positive.
That's great to see that there is more positivity from the private pay market, because there was definite hesitancy with private payers referring relatives into care homes during the pandemic. So you've definitely seen an upturn in private pay referrals.
Yes, I mean, definitely an upturn. And I think in particular, it depends where you are on the acuity scale. So if you are higher up the acuity scale in terms of your needs, then that's where the bulk of the inquiries are. Where, for instance, one of our homes is focused predominantly on residential care. Inquiries for residential care are much lower than in a home that has that much higher level of acuity, say, dementia care.
Is that then shaping your potential acquisition targets in terms of where you would like to grow your bed numbers?
Our acquisition strategy is focused now on the three operational clusters that we have, but looking very much at areas where there are there's a high level of not just potential residents, but also staff, and also then looking at the connectivity of that staff, of the local population, and how they're able to get to and from work. And so we're very much looking more at an urban model now, rather than some of our early homes, which were, for instance, we had homes in the middle of the beautiful New Forest, which wouldn't be on our strategy now. Would be more looking like the homes we acquired by yourself in Bristol, which are in highly populated areas.
have you seen then a shift in terms of the labour supply and how that's impacted where your care homes are located? So is it more difficult in rural areas now to attract and retain staff?
Definitely. I mean, I think that one of the key things is people being able to get to work, get to and from work, as I said. And I think one of the key areas for that has been the cost of living crisis and the impact of rising fuel costs for people. So you're definitely seeing especially in more rural areas where people can't rely upon public transport, that there is a significant barrier for them in terms of the being able to get to and from work because of the cost of fuel.
Amongst the many challenges the sector is facing, staffing is clearly one of the key areas that continues to place strain on providers. It feels to me that operators that have obtained a sponsorship license to recruit staff from abroad have been able to tap into new markets for their recruitment needs. Is that something that Allegra have done or are considering doing?
It is something that we are doing and will continue to do. We think it is very, very important to help the shortage of staff within the care sector and indeed with many other sectors. When we acquired our first homes down in Hampshire, they actually had existing sponsorship arrangements in place, and that was very, very good because we were sort of up the curve in terms of when the sort of wider crisis hit the sector, that we had that mechanism and facility in place that we were able to go out and draw upon overseas resource to be able to come in and help that. So whilst, like everyone in the sector, we saw significant increases in our staff costs across the portfolio, we have been able to use the sponsorship, and now we are seeing as more and more staff arrive from overseas, we are seeing a direct benefit to the financial performance of the homes, but also to the operational performance. And I think that is it's an important thing, is that whilst the agency staff provides a fantastic, almost sort of support service to the care sector, there's nothing better than when you have your own team members who are there, who get to know your residents, who buy into the culture of the business, and who are the permanent face and care providers for the business. So working not only with international sponsorship, but also how do we attract our own local staff, and how do we retain those staff? How do we give them a career pathways? And that's something that that Helen Jones, our CEO, has been very passionate about across her career, both in Australia and over here, about how we can really make people see care as a fantastic career choice and something that isn't just a job, but it's also a career and a vocation.
Henry, we conducted a sentiment survey for our Business Outlook report and asked care providers what their sentiment was for 2023. The results were perhaps not as negative as the press would lead us to believe. What is your sentiment for the year ahead, and what are Allegra's goals for 2023?
Looking forward, Rob, our goal for actually the next 2 years is to double the size of the business. So therefore, we need to acquire more homes and good quality portfolios. So we are positive, but we are looking at the risks. So I think rather than glass half full, we look glass half empty and look at what are the where are the finance costs likely to go to as over the next couple of years as SONIA changes, as base rate looks to increase. Being realistic in terms of staffing costs, looking at the rise in utility costs and food costs, etc. So we are looking forward from a very positive point of view, because we see opportunities in choppy times, but with a very good funding partner in Moorfield, who are very supportive of our growth plans. We are cautious but positive at the same time.
Henry, you're also Chief Development Officer at Allegra's sister business, Amicala. What are Amicala's aims for 2023?
So for 2023, Amicala is looking to significantly grow. We currently have 2 planning applications that have been submitted and been reviewed by their respective local authorities. I think that it's fair to say that the sector is undergoing a significant growth phase, partly because of the amount of capital that's coming into the sector, and also from local authorities understanding that the integrated retirement communities, assisted living models, and what they are and what use class they should sit within, and the benefits that these provide to the local areas. So that, I think, will speed up the delivery, and therefore we're very positive for what that would mean. In terms of how 2023 is looking to come forward, we are seeing a number of opportunities coming forward There is definitely a pricing realignment that is going on at the moment. A number of opportunities that we looked at previously are coming back to the market, and the pricing has definitely adjusted, whether that be because of the cost of capital, whether it be on an equity or debt perspective, but there is and obviously the impact around cost of living and what that's having on the exit prices for the ultimate end sales. But there is a shift in the land market at the moment, which for us as well capitalized business makes it a very interesting year ahead.
So we touched on earlier about the importance and the sort of recovery in the private pay referral. When you're targeting care home opportunities, do you look for a blend of funded local authority CHC clients? What's important to you in terms of the funding profile of a care home?
The majority of the care homes that we have had, all the care homes that we bought to date, have had a heavy reliance upon local authority funded or NHS funded residents. For us, we see, and typically we're targeting ma and pa owner operators, and those are people where the businesses typically have very good operational standards and a very good culture where the owners have been really involved in the day-to-day running of the businesses. So for us, we see those as opportunities to be able to come in and to put the Allegra household model of operations in, to instill new technologies within it, but also to create, link it into the wider portfolio. But obviously at the heart of that is what can we do to improve the real estate. And so a big part of what we do is the built form upgrades, and to improve the real estate and the presentation of that, and really that sort of 90-second wow as you come in, and then how that feeds through to the communal areas into residents' bedrooms. And that for us is what we believe will create the opportunity for residents from the private market to be more attracted to homes. So within our business plans, we typically target a swing, not a large swing, but a swing from local authority funded residents to private pay.
The household model is something that you and I have discussed for a while, and I know that's something that Helen Jones is a particular focus on. Can you explain that to us in a bit more detail?
Yeah, so this is a model of care that Helen rolled out created and rolled out in her native Australia. And this is where we break the homes down into smaller scale clusters. So clusters of bedrooms with domestic scale kitchens and communal areas. And we have teams who are allocated to those. Where that works from a resident point of view is that they are much more familiar with the team members and with the residents. And so it builds relationships with the staff, but also with their fellow residents. And also from an operational point of view, it means that we can have different care types within different parts of the building. So for instance, St. George's that we bought through Christie's right at the start of our journey in 2019, which is the first home we have rolled out the household model on. We have different households for, we have respite care, we have nursing care, we have dementia care, and we are able to flex those depending on where the demand is within the local area. And that provides a really good operational efficiencies, but also the standard of well-being for the residents is we believe increased.
It feels like the later living market in the UK is lagging behind many other countries, and I know you're doing a lot of research in how other countries are providing this accommodation. What lessons can we learn in the UK in terms of how this provision of care is provided in Australia and America, for example?
I think it's very interesting that the two countries you mentioned both have a real understanding from senior living potential customers around the product. So therefore, people are very willing and very aware of the opportunities to move into some form of later living, and that has really been the sort of catalyst. But I think what has happened in both Australia, New Zealand, and America is that there has been an acceptance from their governments or state governments in some cases around this form of product and the fact the benefits this delivers to the healthcare sector, to the housing market. And so if you take New Zealand as an example, they have a Retirement Villages Act, which provides the parameters for the operators to operate and consumer protections. And that has been the catalyst for some of the top 10 largest businesses on the New Zealand Stock Exchange, such as Ryman, to be to be absolutely huge businesses, because the sector has an acceptance and a reputation that allows for people to have confidence in the sector and wanting to move into the product and ultimately to invest in the product. And that's coming through significantly in the UK. The ARCO Consumer Codes, the trade body for the integrated retirement community operators, is based upon the New Zealand Retirement Villages Act, and that has been a catalyst to a lot of investment coming into the sector, and the different sort of tenure choices. And I think what we're seeing now is, as the sector comes through, just you saw in the US, Australia, New Zealand, is that as more capital gets comfortable with the product, they are putting increasing amounts of capital in, and that means you're seeing much greater choice for consumers. So you're seeing much more, many more urban models. You're seeing schemes in central London, super prime, right the way through to mixed use schemes. So we're seeing a lot more shared ownership. We're seeing a lot more rental. The deferred management fee, event fee model is growing significantly, and customers are voting with their feet. And it's one of the things that has come out of the pandemic, is that there's been a significant uptake in older people who felt very isolated within the pandemic, staying at home, observing the rules. But actually, those who are living within senior living communities, the whole community became the bubble, and people were able to sort of self-isolate together. And I think that has been a big driver for the sector's growth, going forward, to date and going forward.
During the pandemic, there was a definite spotlight shone on the social care sector and how it supported those in need throughout a difficult time. Do you see a benefit in the profile of the social care sector and how it's working differently with the NHS?
If there's one good thing that came out of the pandemic, is I think that if it shone the light on it from a government perspective. Has it done enough? No. Do we need to work closely with the NHS? Yes. The sort of crisis that's happening in the NHS and the health secretary looking to move people out of or block book beds within care settings to help with that crisis. I think that's a good step, but I think we need to look at government working really closely. How do we fund care? How do we provide local authorities with enough funding? So the challenge is to work closely with the NHS. It's also to work closely with government. It's not to be seen as the afterthought. To be honest, a lot of the time it was clapping for the NHS, but actually it should be clapping for the NHS and social care sector as well.
Yes, it's fascinating, isn't it? Because there are 13,000 patients in hospital now that are fit for discharge, but the system doesn't seem to be working. One would hope that that there is a more connected relationship between the NHS and social care moving forward to enable that discharge to happen and the system to work more freely.
We're still closing more care beds than we are opening as an industry. So, a lot of that comes down to people not being able to run their businesses efficiently. And I think that actually what we're seeing as a result of the impact of 2022 is we're going to see more care homes being lost this year. Those where perhaps a smaller, less efficient homes, some older conversions, as an example, they are going to have been hit with inefficient homes that have got high energy costs for running them. They're not as efficient from a staffing perspective, and equally, they may, let's say, a residential care home. Those aren't the homes that are going to be taking both the private market, but also where local authorities, if they have a choice, are going to be placing their residents compared to the modern purpose-built homes.
Hot topic at the moment is energy costs. How have the energy costs increases in the last year impacted Allegra and really how you operate your homes?
Thankfully, the majority of our homes were on fixed tariffs for a period of time. So we've been able to ride that out across the majority of the portfolio. But where we have had to negotiate, we've come to the end of our contract, costs have gone up pretty significantly. We are able to pass on some of those cost rises to both being supported by local authority funded residents, local councils, but also we've had to increase our private pay fees, which is not something we'd like to do, but it is we've had to do that. It's very important for us to focus on sustainability and focus on how we can bring green energy into our homes, and also how we can make them more energy efficient. And so from our point of view, that will alter our acquisition strategy. So some of the older homes that we may have once acquired within a portfolio that would have, for instance, single glazing, we would either be looking at that home and saying, okay, well, we've got to put double glazing in, so that cost needs to go into the budget, and that will therefore impact the budget price. Or indeed, that home may no longer be fit for purpose in terms of where we want to go with the portfolio, and therefore we won't be acquiring it. So I think as the impact of rising energy costs is definitely going to change the criteria that people have, which will affect the viability of some homes, I'm sure.
So you are seeing a shift from funders then on their focus in the green credentials?
Pretty much all private equity investors have now committed to their own ESG strategies and to having a net carbon zero across their portfolio by a certain date. I'd say it's something that from our partners Moorfield runs absolutely through their portfolio and is a real focus. That's interesting is that fed through to our acquisitions. We have sustainability audits carried out really to establish the base level in terms of what is our energy consumption, what are the environmental measures that are in place. Homes that are and it's really across real estate, that are environmentally friendly and have a real ESG mantra are ones that are going to be really the only ones that the big funds, institutions are going to be able to buy, because it is becoming a criteria within their acquisition criteria that you will meet the sustainability, social value and corporate governance criteria and sort of minimum thresholds. The care sector has a fantastic opportunity because social value, from the S of ESG, sits absolutely at the heart of what every care home does, and providing fantastic levels of care and support for residents, but also looking after team members and how that integrates into the local community. Sustainability is going to be the big one. How do we make our homes more efficient? It's something that has become front and center of what not just what investors want, but actually what governments want, actually what we as people want. And I think it's really inspiring to see the work that is happening. People typically work within the healthcare sector because they care and they want to make a difference. And there's some truly inspiring people that you and I deal with on a daily basis. And I think that ESG really ticks the box of what those people want and what we as a sector want, and actually how we can inspire to make a real difference going forward.
Henry, thank you so much for your time today. It's been fascinating to chat through Allegra and Amicala's plans and strategy for 2023. And, we really look forward to working with you as the year progresses.
Thanks very much, Rob. Really enjoyed the discussion, and thank you for the ongoing support from the Christie's team. You're an integral part of our growth plans.